Imagine you're at a party and someone whispers to you, "Hey, I know a secret about that guy over there. His business is about to fail." How would you feel? Intrigued, skeptical, maybe even a little excited to be in on some inside information? Well, in the stock market, there's a group of people that make it their job to find these kinds of inside secrets about companies. They're called short sellers, and we're going to talk about why they matter to you as an investor. What's crack-a-lackin'? I'm Russ, your favorite welder that's passionate about passive income. And before we dive in, I want to give a shout out to one of our newsletter readers, Jim Betts, who suggested this topic. And speaking of which, if you're not already subscribed to my free and fantabulous weekly newsletter, sign up using the link in the description below. So what exactly is a short seller? Think of them as the skeptics of the investing world. And while most of us buy stocks hoping that they'll go up, short sellers bet that a stock's price will go down. They borrow the shares, they sell them on the open market, and they hope to buy them back at a cheaper price later on and pocket the difference. Now, I know a lot of people talk ill about short sellers, and they're often seen as the bad guys that are trying to profit from a company's misfortune. But here's the thing, short sellers actually play an important role in the stock market. And they're like detectives, always looking for problems with companies or as to why a stock might be overvalued. Now, as long-term investors, when we see a stock that has a high short interest, it should be a bit of a warning flag. Now, it doesn't mean that we should automatically sell, but we should take notice, pay attention, and get ready to do some extra homework. So here's a cool thing. When a lot of people are shorting a stock, companies sometimes can fight back by raising their dividend or doing something else to attract more buyers, because this can force short sellers to buy back the stock, which is called covering their positions, which can actually drive the price up. It's called a short squeeze, and it can be pretty damn dramatic. But what about stocks with low short interest? Generally, anything below 2% is considered pretty low. And when we see this, it often means that the company is well managed and has no obvious problems. It's like a vote of confidence, even from the market's biggest skeptics. Here's the article shared by Jim, and it is the 7 best Warren Buffett dividend stocks according to short sellers. And it's looking at the stocks held by Berkshire Hathaway that have the lowest short interest. There will be a link in the description below, and if you have ad blocker and want to read it without being bombarded by ads, have at it. But moving quickly through them, at number 7 we have Chubb Limited, ticker CB. Number 6, American Express, ticker AXP, with 1.31% short interest. Number 5, Coca-Cola Company, ticker KO, 0.91% short interest, so that is really low. Number 4, Bank of America, ticker BAC. In the number 3 spot, we've got good old Apple, ticker AAPL, which of course we know Warren has been selling, and they reduced their stake about 50%, but 0.89% of the Apple shares are currently shorted. Number 2, Moody's Corporation, ticker MCO, at 0.85. And in the number 1 spot, we've got MasterCard, ticker MA, that has 0.64% of the shares outstanding that are short. So that tells us that the short sellers really aren't seeing a whole heck of a lot wrong with those, and maybe that they're just a little bit overvalued, but there's no glaring and obvious reasons to expect the share price to come down anytime soon. So I ran a little exercise, and I challenge you to do the same with my stocks, and found, interestingly enough, that the highest amount of shares that are short was Harrow, ticker HROW, which is one of my favorites, but they're a small pharmaceutical company, ophthalmologic. They do eye drops and things where you're cutting, poking, prodding into the eyeball, and they have topical pharmaceuticals for that, numb the eye. But I think they're going to go great places, but they've shot up really fast, really quickly. So the shorts out there at 13.5% think that they are due for a pullback. And again, if they're wrong and the stock price keeps going up against them, look out, baby. We could see a pretty hefty short squeeze. And moving on down the list toward the bottom, my 3 lowest were AbbVie, ticker ABBV, at 1.10%. ExxonMobil at 0.99%, and the lowest, Johnson & Johnson, good old J&J, at 0.88%. So those would be relatively probably safe, I would say. But the ones at the top, again, we want to pay a little bit more attention to and see if we can disprove why the short sellers are so high. It's kind of like a game of Clue. We have to disprove the short sellers' accusations. And if we can't disprove it, then we might need to rethink our position in the company. So I want to show you how I've used some of this information during my research, and a company that's come up on our radar we've talked about is Clear Secure, ticker YOU. And they have a short interest of about 21%, which is really, really high. So I did what any curious investor would do. I Googled Clear Secure short report, because shorts will put out a short report. But a lot of times the short sellers want to keep this stuff really, really secret, and they don't want to let the cat out of the bag. And the most recent thing I could find about Clear Secure is from 2023, and it's another Insider Monkey article. And they were telling why Liberty Park Capital Management was short, and you can also download the copy of it here. But for brevity's sake, Liberty Park Capital had made the following comment about Clear Secure from the Q2 23 newsletter, when they said that earnings were slightly above consensus estimates. However, the company continued to show declines in customer retention, and we think you, ticker YOU, is at risk of significant churn if its partnership with American Express is not renewed, and we contend the opportunity with airports is more than fully priced into the shares. So they've kind of done our homework for us. So on the last Clear Secure earnings report, which as of this recording was Q2 24, I did a little digging to see if there's any of that holding water, and their members, the Clear Plus members, which Clear Plus is when you see those people in the airport that skip by the line to verify their identity, and they do it with their biometric data. So fingerprints or eye scans, really convenient, because you're probably always going to have your fingerprints and your eyeballs with you, but you can sign up right at the airport and skip the security lines. So that's Clear Plus, and it costs $199 per year. But as they said, there's discount programs, certain credit cards, and airline loyalty programs like American Express and Delta Sky Miles. So we see that the members have been growing. That's good. And the total cumulative platform users are also going up and to the right. But what Liberty Capital saw that they didn't like, or they did like because they're shorting it, is that the annual Clear Plus net member retention has been going down, and you see that it is continuing to go down quarter after quarter. It has not stabilized yet. So members are not signing up year after year. They're using it for a year, and then for whatever reason, they're not coming back. And then if they lost their partnership with American Express, which as of this recording, they still do have, then that would really reduce Clear Secure's revenues. Remember that short sellers aren't always right. Nobody knows for sure exactly what's going to happen in the stock market and in life, but they often ask the tough questions that we as long-term investors should also be asking. So by paying attention to short interest and understanding why people are betting against the stock price to go up, I think we can make more informed investment decisions and potentially avoid some costly mistakes. So the next time you're researching a stock, take a look at its short interest, because it might just give you some valuable clues about things that are going on with the company that aren't really being talked about. Hey, share with us in the comments below what you think about short interest. Do you use it when doing your research? Do you even care about it? And if you found this video helpful, consider a thumbs up and subscribing. And in this floating little box next to my head, I gave 4 strong buy dividend stocks that have over 10% short interest, meaning that they could potentially be set up for a very, very nice short squeeze. So if you click that floating little box, I'll tell you exactly which ones those were there.